In this video, we will see the reason why 90% of investors lose money in the stock market and how you can avoid it. The stock market is 20% technical metrics and 80% psychology, right? So if you are calm and you have a good temperament, you can make a fortune in the stock market. And if you are too emotional, you may make a lot of mistakes. And the first thing I want to address is how to deal with emotions when you have a market. Now, as I'm recording this video, the market is down. We are entering a correction territory. Most stocks are down 10-15%. A lot of darlings of the stock market are down 20, 30, 50%, like Tesla minus 50%. It can be scary. And most investors at this stage of panic, they just sell at the bottom of this cycle. They just hold, and then the stocks are going down, and they sell at the very wrong price. Is the definition of buy high, sell low, which is a stupid mistake to make. And most people do this mistake because they don't know. They don't know when the rebound will occur. They don't know how frequent is a stock market correction. They think that stocks are only going up by 10-15% per year, and they have too high expectations. And that's not good for your wealth. That's not good for your stress. That's not good for your health. That's not good overall. So please first keep your emotions in check. Know what to expect from the stock market. And you can gauge, you can have a sense of what the emotions of the market are. On this website, you just type fear and greed index, and now today markets are down. We are in extreme fear territory, and this is based on different indicators: price action, price trend. And if you look at the timeline, you see that this emotion panel, this range, fluctuates a lot. The last time we had a fear momentum was in April 2024, and then the other last time was August 2024, and we also had this in December 2024, and now we are in March. We are in extreme fear territory. But you see, this is not the sentiment is not staying at this extreme fear territory. You have rebounds eventually, and look at this. In October 2024, everything rebounded sharply, and we entered the greed territory. And I watched a video from Howard Marks recently saying, yeah, now with software and AI, will the market change? And the basic response from Howard Marks, that was a great response, saying, yes, the metrics and the tools will change, but you are still dealing with humans. And as long as humans are putting the buy and sell order in the market, you will have emotions. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. So 100 years from now on, you can expect emotions to continue to drive the stock market. And when you have a small decline in the market, emotions will accelerate the decline, and you will have strong downward movements, and after this, strong rallies. And you will have a lot of greed, you will have a lot of euphoria, and you will have a lot of panic. You have this very good example of Mr. Market from Benjamin Graham, saying that it's sometimes good to humanize the market, saying that sometimes the market is euphoric. You have great news, and you will have great stock prices going up every day. And sometimes the stock market, the S&P 500, Mr. Market, will show you completely maniac, depressive prices, low prices, like we had in 2022. You had a lot of pessimism in 2022. And if you struggle to manage your emotions because you read a lot of information, that's normal. You have too much information on your timeline. A good thing, an actionable tip I can give you, is to have a clear checklist. For example, you can have a Word document or anything like this, and you have a clear valuation checklist when stocks are going down. If you have a shopping list of stocks you want to buy at a cheap price. You can say you can check some boxes like, do you understand the business? You for understand, yes. Is it a good business? Good business, like profitable, margin, etc. And what about the valuation? Let me put V for valuation. This is very important. When stocks are going down, sometimes, most of the time, valuations will go down, and you will go from a PE ratio of 30, PE ratio of 25, 22. At what point are you comfortable buying the company, buying the stock? And only you will know the answer. The price target depends for everybody. You have Lauren Templeton that gave a great example. When you are in a bull market, like we had in 2023, 2024, and you want to buy stocks, maybe you don't want to buy stocks when they are extremely high priced, high valuation. So you do the analysis, you do the research, right? And you put a target price for a stock you want to buy. Imagine you want to buy Google for some reason, Alphabet, and you say, okay, now the price is too high, I'm not comfortable, but if it drops 30% and it reaches this price, I'm comfortable buying it. You don't do this kind of analysis, what I just said, you don't do this in a correction. You don't do this when stocks are already going down. You do this when stocks are going up, and you don't plan to buy them at current prices. The most rational way of doing this is during a bull market, when you just hold and wait. So imagine you do the analysis of Google, you write the target price. Okay, I can buy Google at $150. Okay, very well. Now what's the price for Google right now? Today, 167. Okay, maybe you are tempted to buy now. Maybe you are tempted to sell all your shares, but don't forget you already had a target price of $150. So just stay disciplined. The hardest part of investing is when stocks are going down, you have a lot of media, a lot of news, negative stuff that may force you to act. But now you've done the work. You have done the due diligence. You have a target price. We took the example with the target price of $150, but maybe you did the analysis and your target price was $170. In this case, don't think too much about it. If the thesis is still valid, stocks are going down, you buy. That's the process. If you have a clear checklist like this, valuation, good business, good moat, good management, you remove emotions from your buying process. Because I'm telling you, you will experience emotions in this market, ups and downs. We are living in a crazy world. It will happen, it will fluctuate, and we will go back to extreme greed in a few months, in a few years. Nobody knows. Nobody knows, really. I'm not even trying to guess what the next move will be. So just when there is a lot of fear, you may be tempted to move. Have a clear checklist. It's very important. And another thing that is really important is to, let me put a big circle here, is to only invest in what you know. Is to, oh, that's a strange shape for a circle. Is to only invest inside your circle of competence. If you stay invested in companies you already know, you're familiar with, you use the products, that's better for your mood, that's better for your temperament, that's better for your emotions, and that's better for your financial health. That's the way you can compound your wealth over time. If you try to gamble with stocks, you will be disappointed. So use the circle of competence thing inside your checklist. Very important. You for understand, that's very important. So just double check. If you fill your portfolio with companies you really understand, of which the products you really use every week, you will feel much more comfortable if stocks go down. For example, we all use Google every day. Maybe you think it's a great deal, wonderful, you want to buy more Google. Okay. Imagine you buy here at $190, and then the stock continues to go down, minus 10%. If you really know the business, if you really understand the business, you will not panic. Yeah, you use as much Google as in the past. You believe in YouTube, you believe in Waymo, you believe in Google Cloud, you believe in all these things, and you think it will continue to increase in the future. Now take the opposite situation of not really understanding the company. Imagine you buy here and then it goes down by 10%. You will ask yourself, okay, did I miss something? has the thesis changed? Maybe I'm not inside the arena, so I don't know. Maybe there is something that changed, and then the business will continue to tumble, and then the stock will continue to go down. It will create a lot of uncertainties, and uncertainties will force you to do stupid things. So have a clear checklist. Keep your emotions in check. Checklists are great. Circle of competence. This thing is really, really important to survive in corrections, because you will experience a lot of news. You will be exposed to a lot of negativity when stocks turn south. So that's the reason why the majority of investors lose money in the stock market. Too many emotions, and they don't focus on what they really understand in the market. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description, and I'll see you on the other side.